Hi, I'm Irina, a local realtor in Hawaii. Welcome back to my Hawaii Home Loan Guide. Today we are talking about how you can buy a rental property using a debt service coverage ratio or DSCR loan.
And debt service coverage ratio loans are just like what the name says. You have to cover the debt of the property,
Okay.
in this case, using rental income, either short-term rental income or long-term rental income. It's common with single-family residences, multifamily condos, and short-term vacation rentals. So you can't buy any primary residence or second homes. Mortgage fraud is nothing to play around with. If we can show that the property can generate enough rent to cover the mortgage, the principal, interest, tax, and insurance, you get your loan. The DSCR ratio is equal to the net operating income that you should expect from the property divided by debt service. And then the debt service is simply the principal, interest, taxes, and insurance, and HOA dues if there's an HOA. For most lenders, if you're buying a single family residence, they don't look at any other expenses. They just take the gross rent. We only look at the property on the back of the income that the property is going to generate. And you don't have to provide anything else, no pay stubs, no W-2s, no tax returns, the property and your FICO score. Okay, so an example is if you're going to buy a property, let's say it's a house, and let's say it's the gross rent is $5,000, and we calculate that the PITI is $4,000, then you have a DSCR ratio of 1.25 to 1. Now that means anything over 1 means the rent is going to cover PITI. If the DSCR ratio is less than 1%, it means the rent can't cover the total cost. That means that the buyer every month has to contribute something to keep, payments going to the lender. Debt service coverage ratio loans generally have to have at least 15% down. We do have debt service coverage ratio loans where the rental income isn't going to cover the housing payment. You have to put more down. So let's say the rental income only covers 75% of the PITI, you can still get that loan. You might have to put 20% down or maybe 25%, depending on your FICO score. And then they have such thing as a no ratio loan, where as long as you're going to put it into a rental situation, they'll do the loan for you. So it can be for anybody, investors, real estate investors, self-employed people, W-2 people. It's a good loan for a lot of people. Yeah.
A lot of calculations involved, but the key takeaway is this. DSCR loans are about the property income, not your personal income. Lenders care about rental potential, down payment, credit score, and whether the property makes financial sense. Have questions? Leave them below. Thinking about buying, investing property in Hawaii? Let's talk. Next up, can someone assume your loan? And what happens to the mortgage if something happens to you?